Right, today we're going to look at this chapter called anti-avoidance. Okay, and when we look at anti-avoidance, the main area we're looking at is how people try to avoid tax by legally structuring transactions. Okay, so a high income individual may resort to splitting his income by settling or bestowing or giving possession or under legal sanction, or in layman's language, giving away some of his income producing asset or income stream to individuals who are at lower tax bracket, yet at the same time retain the power to revoke such settlement or holding significant measure of control. Does that make sense? So they can pass away something and then revoke it at the same time. So this is basically the idea that you still have control over the issue. All right, an example here would be this one. Okay, Oliver Queen has a business income of 100,000, rental income of 150,000. Okay, he has a personal relief of 20,000. He gives his rental property to his daughter who is still studying and below age 21, so that the rental income is legally hers. Okay, discuss tax benefit of the move and whether there's any limitation to this. Okay, so let's look at the tax benefit of the move. I think it's about 250,000, right? So it's 230,000, correct? Yes, no? Because currently your income is 250 minus 20 is going to be 230,000, yes or not? This will lead to tax payable. How much? Calculate. Right, we are looking at this question. Are you okay now? Anti-avoidance, all right? So how much is this? I need some basic calculation done. Do some mathematics. Can? Done? How much is the first tax? How much? 55,200. Yes, sir. 55,200 too high lah. I don't think it's 55,200. Should be about how much? Should be a 40 plus something lah. How much? 40? 42? 100. 100 lah? Around there lah, correct lah. That's the number I would have been expecting. 55,000 was too high. How did you get that number? Okay. Alright, the next one. This will lead to tax charge. 80,000 will be how much? 6,700, right? Okay. The daughter will be charged how much? 141,000 she will be charged. 20,740. So total saving is how much? Well, minus 42,100 minus 6,007 minus 27. What do you get? Saving off? How much? Around 14,000. Right. Okay, that's the answer. Can? Then, are we okay with the answer so far? Can, huh? Okay. What is the purpose? Can? Clear? Not clear? Any question? Can I move on? And you just learned about substance over form. The form is the parental property is owned by the daughter, but in substance, it's still owned by the father. Does that make sense? The income is still owned by the father. This is where substance override form. Are we okay? Right, moving on to the next one. Can I move on to the next one? The next area we're looking at is this one. A settlement court under section 65 to include any disposition, trust, covenant, arrangement, agreement, or any transfer of asset or income without adequate valuable consideration. Okay, that's one of the things you look for. Feature. Okay. Number one, so features. One is can. Clear this part, huh? Okay, can I move on? Okay. But remember, does not apply for settlement made as a result of court order or by employer to widower beneficiaries of deceased employees. Another requisite feature of anti-avoidance is that the settler retains some measure of control or retains accessibility. So control is still retained, all right? There are three possible settlements that can come in. Settlement by settler to an unmarried relative below 21 years, or settlement by a settler on any other person with absolute power to revoke the settlement, thus causing property or income to revert back. Okay, and settlement that does not have the two above features, but settler or the person controlled by another is able to access any income accumulated. Okay, so there's an excess there. Okay, First two are specific, often encountered. Third is a backup. Okay. So over here, when you talk about settlement of an unmarried relative under 21 years, you got deeming of income, correct? Such income is deemed to be income of settler, not the relative. Remember, this is usually keyword related party. You can see now, there will be like some relative. Okay. So important to note, deeming of income is applicable during the life of the settler. Person makes or enters settlement. After making, settlers get caught. If the settler dies, the income after the date of death cannot be deemed anymore, correct? So deeming will stop at death. Instead, the income after the date of death will constitute income of relative. A relative is defined as any one of the following. Okay, child, wife, grandchild, brother, sister, uncle, aunt, nephew, niece, cousin. Okay. Do note, settlement to be caught, relative must be unmarried, below age of 21 at the beginning of the basis period. Remember, beginning of the basis on 1st January. So the check is on 1st January for age and marriage. Clear? Remember, check for age and marriage on 1st January. Okay. Have a look at this part. Mr. Arrow on 1 January gifted a rental property to his unmarried nephew, was born on 6 April 1994. Okay, look at the dates. So I can support his education need. Rental income for 2015 is 36,000 and 2016 is 48,000. Okay. Discuss tax implication. Explain impact if Mr. Arrow had died on 30th September 2015. So let's look at this part. Can, huh? Okay, clear on how to handle that question? So all you have to know is just remember this is a normal exam question. Huh? Okay, might be worth about 3-4 marks. That's all right. Okay. The next one you got is section 65(2), settlement of other person with power to revoke, causing property or income to revert. Okay, in this situation, settlement may be made in favor of any person. There is no stipulation of relationship, age or marital status. The recipient of settlement need not be a relative, may be married or unmarried, may be at any age. Okay. Mr. Ray Palmer founded a business that had grown profitably. On 1 July 2015, he voluntarily entered into an arrangement with Miss Felicity Smoke, making her partner and giving her 30% share of profit. Arrangement state Mr. Ray may, within 1 month notice, unilaterally revoke arrangement, and Mr. Ray is entitled to all Miss Felicity Smoke's profits. Discuss the tax treatment of the arrangement. Are you okay? Can? Can, huh? Okay. So that's basically this issue, okay? Now, section 140, power to disregard certain transaction, okay? Provides wide general power to Director General to combat tax avoidance by disregarding certain transaction and computing or recomputing tax liability. Where DGIR has reason to believe that any transaction produces effect of alter incidence of tax, relief from tax liability, evade or avoid tax, or hinder or prevent operation, he may disregard the transaction or vary such transaction to counteract any intended effect. So he can modify the transaction. Okay, may invoke section 140 in respect of related party transactions. Okay, person one who has control or other whom under common control, or individuals who are relative. So as long as they are related parties, they'll get trapped. Are you clear? Okay. On the grounds that they are not par with the transaction between independent parties dealing in arm's length. In invoking section 140, DGR must adhere to rules of natural justice, provide the grounds and the basis for its adjustment, recomputation of tax liability. Okay. So here, principles that you need to know. These are quite important principles. Mark, must memorize. Okay. These are the rules, principles developed from case law. So what they use is form over substance. Where transaction has proper legal form and is given legal effect, the transaction is generally not disregarded. Does that make sense? Usually you follow form. Okay. Despite having proper legal form, the transaction, when stripped of its tax advantage, has no merit. It is a sham transaction. In substance, is nothing more than a tax avoidance. Then they are justified in disregarding the transaction. I think I showed you earlier on what is a substance over form already, yes or not? Okay. Then there is something called choice principle. So remember, these are all the principles you have to know about. One of it is called form versus, the other one is, okay. Next one you got is choice principle. So when you have a choice, you have the choice. As long as it's commercially substantial, you have a valid choice to make that allows you to reduce your tax. For example, compare buying a property and leasing a property, and you feel it's more tax advantage to lease. That's your choice. You cannot be denied that choice. Does that make sense? That's the meaning of that one. Okay. The next one you got is mitigation, tax mitigation. Well, according to this, no man in the country is under smallest obligation, moral or other, to arrange their legal relations to into his business or his property and enable IR Inland Revenue to put largest possible shovel into his store. Has a right to arrange tax affairs so that he pays the lowest tax possible. So you can't avoid that. That's called tax mitigation. Clear? The next one is commercial substance. The word commercial substance means basically, in terms of business, it is a normal business transaction. People won't see it as something else. Like, for example, group of companies restructure to maximize business synergy. Complementary activities, upstream, downstream, horizontal integration, all of this cannot be denied because it makes commercial sense. Clear? Okay. Next, ordinary commercial activities. So, ordinary commercial activity basically means you raise working funds from issue of bond rather than taking a bank loan, okay? Thereby incurring a discount rather than interest. Withholding tax is avoided. Does that make sense to you? Yes, no? For example, I give you an example there. Can? Follow, don't follow? So that's the meaning of ordinary commercial activity, got it? That you can do the bond and it shouldn't be a problem. Are we okay? Okay. Rules of natural justice. Okay. Now, in Malaysia, it has been established that successive judicial pronouncements, the invoking 140, TGI must observe rule of natural justice, must state the grounds in sufficient detail at time of raising assessment so that taxpayer is fully appraised as the basis of allegation of tax avoidance and given sufficient time to prepare, present his defense. Must have valid grounds at the time of invoking, not merely suspicion or conjecture. So this is last one. Okay, done. Can? Clear? Okay, let's move on to the next part. Tax planning defense. Tax planning and defense against anti-avoidance. Okay. In planning activities transaction, reaping maximum tax savings may be legitimately achieved provided the following factors are present. Okay. Good, proper legal form that's enforceable and enforced and enforceable. So you must have legality. Okay. Transaction is proven to have commercial substance like business synergy, complementary strats. Transaction is not a sham transaction. That means if you take out everything, it cannot just be a sham. Transaction is carried out in ordinary course of business and is transacted at arm's length, prevailing market price. Then it should be able to withstand transfer pricing scrutiny. All right. So those are the basic defense. In defending against invocation of Section 140, taxpayer should bear in mind all of some of the principles above, as well as determining whether DGR has followed the rules of natural justice. Now, Section 140A. This is power to substitute price and disallowance of interest in certain transaction. So you might get substitution of price. This is usually due to transfer pricing. Make a note. Transfer pricing scenario. This section forms a basis of transfer pricing review and audit by tax authorities. Such pricing between associated parties should be based on principle of, this is the key word they use, independent parties dealing at arm's length. That is the main word for transfer pricing. Should be independent parties dealing at arm's length. Subject is not discussed here. Okay, subsection 4 and 5 relate to tin capitalization. Okay, so tin capitalization, do you know what is tin capitalization? Yes, no? What is tin capitalization? If the clear, not clear? Whenever the parent gives loans to subsidiary, that means foreign parent gives loans to Malaysian subsidiary, got it? Then they will look at the Malaysian subsidiaries gearing to determine whether or not the subsidiary is overgeared. Overgeared means they'll say like you are manipulating for tax. You didn't inject enough capital, correct? Can. Any questions? Okay. Next one. Section 140B, special provision, loans or advances to director of a company. Well, loans or advance to director of a company, you already know, right? What happens? It's deemed as interest, right? Remember, deemed interest income? Okay. Previously perceived that tax authorities, that companies sometimes give interest-free or low-interest loans to directors who are shareholders as disguised distribution. With effect of year of assessment 2014, Section 140B was introduced to deem company to have derived interest income in respect of such loans. We did this before already, remember? Okay. Next. Powers regarding certain transaction by non-resident. Where a non-resident carries out trading with resident controlled by non-resident, owing to close relationship between two parties, the resident derive little or no income. The non-resident may be taxed on income reasonably expected to accrue to the resident on arm's length basis. The resident will be deemed to be agent of non-resident for this purpose. This was also appears to be intended as basis of transfer pricing review. But the IRB can use 140A. So let me give you an example on this. Okay. That's an example of IRB issues. Got it? Clear? Not clear? Can I? Are we okay? Any questions? Can I? Right. Can we just jump to down here? Go to Lab 1 a bit. Where's my Lab 1? Can you find my Lab 1? I need you to jump down here. So I'm just going to jump to this transfer pricing here. Okay. It's actually supposed to be below that one. All right. Okay. We'll just jump to transfer pricing straight away. Page 119. Lab 1 is Lab 1. This is transfer pricing. All right. Okay. So under transfer pricing, remember jumped. It's linked to the section 140 and 140A and 141, all right? Found it? Page number 119. Clear? Okay. What has happened is DJR has issued guidelines on transfer pricing to determine what is arm's length price for transaction between related parties to counter any tax avoidance schemes which are not based on commercial and taxation principle. So again, under tax avoidance, does that make sense? Okay. And there is a transfer pricing guideline. That means guidance is given. So if you're going to work in transfer pricing, you have to know the guidance, all right? Okay. This is applicable for cross-border transfer pricing. It's also possible for domestic transfer pricing and thin capitalization. Okay, let's go through these words. So these are three things that can happen because of transfer pricing. Okay. First one, cross-border transfer pricing is between two countries. When goods or services cross national boundaries within a multinational group. Okay, that's the first one. Multinational groups. Services are always subject to withholding tax and is always more complex. Okay, next one. Domestic transfer pricing, shifting of profit from a non-pioneer status company to a company enjoying a pioneer status company. Does that make sense? That means one company is getting some tax benefit, another one is not. So you might want to shift it around there. That's another kind of transfer pricing. So example includes management fee, royalties, interest paid to related companies in low tax countries. All right? Now, thin capitalization, ratio of equity to loan ratio, is an area IRB considers to be a red flag for tax avoidance. That means if you're gearing too low, it's going to be an indication of anti-avoidance, correct? Okay. Where the ratio is abnormally high, IRB may consider normal practice to decide on tax impact. They might revise it. Can? Okay. Now, transfer pricing, when you are dealing with transfer pricing, this one here, it's linked to these ideas here, the normal method, okay? The normal method you need to know is something called comparable uncontrollable price method, or CUP. Then you got resale price method, and then you got cost plus method. Now, comparable uncontrollable price method, price is comparable bona fide transaction between unrelated enterprise are used as a reference. That means you compare it with normal market price, like what I did earlier on. Okay. Second one, resale price method. Goods sold to an associated company is adjusted by final sales less markup for profit. So you might actually mark up and see the price again, revise the markup. So look at the standard markup and figure it out. And cost plus, goods costs are established and appropriate markup is added up. Okay. Basic rule for establishing transfer price so that it cannot be challenged. This is the way to avoid transfer pricing scrutiny. All right. Number one, you avoid re-invoicing through tax haven as far as possible. Don't go through tax haven. Be consistent with your pricing policy. Substantiate such transaction with valid and proper documents. Now, remember, IRB may invoke anti-avoidance rules under 140A to adjust price, 140A to substitute price, okay, or disallowance of interest in associated person, and 141 to extend power to adjust transaction between resident or non-resident. Clear? Example, let's have a look at this part. A Standard Berhad sells 70% of its product to associate company Breed Standard Berhad for RM 100 ringgit and sells the balance at open market at 150. So how? Which method they will use? Can? Clear? Clear? Next one we're looking at is going to be Boom Standard Berhad is the Malaysian subsidiary of Cadbury, which is located overseas. Okay, there you got a resident, non-resident. That's the first indicator. Okay, Boom distributes products made by Cadbury, but the products is also sold by Cadbury to local distributors. The price obtained by Boom is 100 ringgit and is sold by Boom for 120. The normal gross profit made by local distributors is 40%. So here, a bit tricky, yes or not? Can? Some can use both lah. Follow ah? Look at what information you get, features. Markup method, they will always talk about the percentage markup. Okay, now. But whose markup? Look at whose markup. Look at whose markup. Okay, the first method looked at the price you normally sell to outsider and the price that you sell to your parent or subsidiary. Are you okay in the first method? The cup method. Cup will look at what's your price to outsiders first. Whereas the second method look at the markup used by other people in the business. Clear? Not clear? Are we okay? Can I move on? Any questions? Okay, last method. Let's go to the last method. Dragon's Remember makes a product specifically tailored, keyword specifically tailored, underline that one, specifically tailored for its parent in US. Dragon buys all raw materials from independent provider for 40 ringgit per unit and total cost of manufacturing is 160. Price Dragon sells to parent for around $200. Analysis of unassociated company that sells the same product for 40% markup. Normally they sell for 40% markup, okay? But Dragon is selling it for how much? 200, right? So this is the can, Clear? Okay. The rest of it, okay, there are, let me go back to, can I jump back? Okay, this one here, I'm just going to summarize it straight away. Okay, the section 29, section 29 here, 3, 4, 5. All right, I'll just summarize this for you so that you know which are the important ones. All right, don't stress yourself out. That looks like a lot, right? Yes or no? I'm going to summarize it for you here. Okay, done. Some of these rules you already studied before. You know, the rules with interest you studied before when we did chapter 1 itself. Remember? The deductibility of interest, got it? The rule of section 32, you learned it before. Remember when we did individual tax? That directors, you can't have that 30% benefit for your housing allowance, remember? The housing BIK. Okay. This too, basically the idea of timing of interest is deemed obtainable on demand, when you can get your interest. Usually interest is on receipt. Remember, usually interest is on receipt. When it's related party, you might override it. Clear, not clear? Same thing in salary and rental also. It's obtainable in the year following receivable, alright? It's assumed obtainable already. That means it doesn't matter whether you get it or not, it's assumed you obtain. Can? Okay, any questions there? Clear, not clear? Can I move on? All okay? So, all of this, notice that all of this is this one that relates to this issue. So you can see interest 100 is payable on year 2013 but only becomes due to be paid in year 2016. So interest 100 is payable in year of assessment 2013 but becomes due to be paid in year 2016. The amount 100 first becomes deductible in year 2016 but is related back to year 2013. Does that make sense? Clear on this part? That's about this impact on the idea of interest. We've done this before already. Okay, so I'm not going to go through all of this. Looks like a lot. Remember, it looks like a lot, but it's not really significant. Can? Okay. The next one we're going to go through is Labuan. Let's jump to Labuan. Labuan is page number. Where's Labuan? Labuan. 115, is it? Yeah, okay. Okay. Okay, now we're looking at Labuan. I'm going to give you a short note for Labuan first. Zakat got limit not? Zakat got limit not? Normal account zakat got limit not? Normal tax. How many percent? How much? Hello. So can remember not? Usually the examiner will ask. Usually not ask, okay? But for Labuan come out means can ask. Got limit, no limit? Normal tax. I'm not talking about Labuan. Normal tax got limit, no limit? Got not? Yes, you studied before, right? How many percent? 2.5%, right? Not. That's the limit. Remember, it's limited at 2.5%, except for Labuan. No limit. Are you okay in this part? Can? Okay, let's just run through this. So I'm just going to run through the basics first. This I call the basics of Labuan, alright? Can I get started? Can? Already? Okay, well, let me just jump here first. Okay, Labuan, well, you know where Labuan is. I don't need to tell you where geographically it's located. Okay, it was set up as an international offshore financial center, IOFC, to bid to attract international financial activity. There is a fixed tax rate of 3% and capped at 20,000 per year. It was seen as a tax haven, and some tax treaty partners of Malaysia renegotiated the treaty and established limit of the benefits with regard to Labuan. So that's why they created this thing, what you call the election. The election was because of this issue of the renegotiation by the treaty partners. Got it? Okay. In response, Malaysia allowed an irrevocable election for companies like Malaysian tax rather than Labuan. Labuan is being rebranded as International Business Financial Center as opposed to International Offshore Financial Center. Got it? So they're trying to IBFC it right now. Now, election to be subject to provision of income tax. To date, 11 countries have specifically excluded Labuan from treaty benefits in their double tax agreement. Malaysia, Japan, Netherlands, UK, Australia, Sweden. These countries basically said, if you have a Labuan entity and you deal with us, the treaty won't apply. That's all. If you go under Labata tax, you won't be able to benefit from the double tax agreement. Okay. That's why you had to study double tax agreement earlier on. There were benefits of double tax agreement. So this means if your company has operations in this country and needs the double tax agreement and also has a Labuan entity and wants to benefit from Labuan, you cannot. Choose one. Choose either the DTAs or the Labata. So if you don't want the Labata, make an irrevocable election. Done. Clear? Not clear. But on the other hand, if you don't deal with these countries, then go for the Labata. No problem. Okay. Are you clear on the logic there? No? That's the logic of the locations. Actually, you won't be tested. Your examiner is not expecting you to memorize it. This is from practical point of view. Got it? Practically, that's why you need to be aware of it. Okay. Now, in an attempt to facilitate Labuan companies accessing treaty benefit, laws have been amended to allow Labuan companies to elect to be treated under Income Tax Act rather than Labuan Business Activity Tax. Okay. Election is irrevocable. So that's the first one we talked about here. Irrevocable election. Got it? That's the idea there. Okay, next one. Labuan entity. Okay, that's the next idea you got here is something, Labuan entity. What is a Labuan entity? A Labuan entity could be any one of this. Okay, it could be a company, could be a foundation, Islamic partnership, LLPs, Islamic trust, Labuan trust. You got Malaysian bank licensee or any Labuan financial institution. Any person declared by minister to be Labuan entity under section 2B. So minister can decree this person to be a Labuan entity. Now, their basis of tax is preceding year basis. Does that make sense or not? They are supposed to be prior year basis, not current year basis. That means that's one difference between Malaysian tax entity and Labuan tax entity. Clear or not? So a Labuan entity is taxed on a prior year basis 1 year later. Follow, don't follow? Okay. So that's one of the things you should know. Tax under Labata is levied on a preceding year basis. Then you got something called Labuan business activity, which is subject to tax. Clear? Labuan business activity means activities carried out by a Labuan entity in a foreign currency with non-resident, or with another Labuan entity. Okay. Ministry of Finance can designate any activity to be a Labuan business activity, which then may enable carrying out of activities with resident or in Malaysian currency. So, never mind, the minister can always give you an exemption and classify you, but generally, it must be foreign currency with non-resident or another Labuan entity. Got it? Okay. Now, what are the trading activities like banking, insurance, trading, management, licensing, shipping, any other activities not being a Labuan non-trading activity? Okay. Labuan non-trading activity means activities related to holding of investments, security stocks. So those are different items. These are called non-trading activity. You hold security, shares, loan, deposit, other properties on behalf. Can? Okay. So, are we okay in what's Labuan trading activity and non-trading activity? Now, what's the impact? Okay, a Labuan entity is subject to tax under Labata in respect of its Labuan business activity. Okay, so it must be Labuan business activity, which is this one. All of this, got it? Not this. Okay. So that's why they are subject, maybe transacted a resident in Malaysia. Now, they are taxed on net profit per audited accounts for Labuan trading activities. Got it? They are just taxed on the net profit. They don't need to do a chargeable income calculation or that. Okay? So there is no tax computation. Understand this part? There is no tax comp. Okay. Tax is chargeable only on net profit of audited accounts in respect of Labuan trading activity, banking, insurance, and so forth. Any other activities, holding investment. So remember, this one will be excluded. Now, tax rate. The tax rate 3% is chargeable income on Labuan trading activities only. Okay. This means income from Labuan non-trading activities is not subject to tax at all. Are you okay in this part? Clear? Not clear. So the tax rate is 3% on Labuan trading activities. Are we okay now? Okay. The difference here is basically you get taxed on one part and then another part you don't get taxed. Okay? Okay. Tax returns and statutory declaration. Labuan entity carrying out Labuan business activity with Labuan trading activities must file for annual declaration tax return within 3 months of commencement of year of assessment. That's by 31st March. Does that make sense? So remember, you have to submit within 3 months, which is 31st March. Okay. Election, you can elect for a 20,000 flat. Now, if you elect within 3 months, remember, you can elect within 3 months of the start of year assessment. Okay, to be charged a flat 20,000. Okay, just charge 20,000 flat. Okay, instead of 3% of net profit. That means Labuan entity will not be required to submit a tax return for that year of assessment. No returns required. Okay, Labuan entity with accounting net profit up to 6667 should file for a tax return and be taxed at 3%. Okay, if the income exceeds this number, you should elect for a fixed sum of 20,000 and no need to file a tax return. Okay, are you clear on the difference or not? No need to file anything, no need to give accounts also. Just pay 20,000 and say, I give you flat 20,000. Are we okay in this logic now? Okay. So there is a tax rebate. Now, zakat paid to Labuan Islamic religious up to the amount of tax charge, whether 3% or fixed amount, may be given as a rebate. Notice this one, this is up to the amount of tax charge rebate. Okay. No refund is available if zakat paid exceeds the tax charge. Got it? Non-trading activities not chargeable to tax. Labuan entity carrying out Labuan business activity, which is Labuan non-trading activity, is not chargeable to tax. Statutory declaration in prescribed form is all that is required to compliance-wise. Just say, I am doing all non-trading activity, done, no tax. Can? Okay. These are certain exemptions that you get. No indirect tax because it enjoys free port status. Stamp duty is exempted on all instruments executed at by a Labuan entity. Labuan entity is not subject to exchange control and no withholding tax for royalty, interest, technical service. So all those are the benefits that you get if you set up a Labuan entity. Receipt of income from Labuan entity in relation to dividend and interest from an offshore company are also exempted from tax. Are you okay? Right. This last one is about individuals working in Labuan entities. Now, individuals working in Labuan entity, a few of them get some benefits. Okay, this is the individual tax part. All right. Minister exempts any person from payment of income tax on 65% of statutory income from sourcing consisting of provision of qualifying professional services rendered in Labuan by Labuan entity. So, yeah, as long as you provide any professional services rendered in Labuan by that company to Labuan entity. Does that make sense? So it must be done in Labuan. Then 65% exemption will be available. So it might be legal, accounting, financial. Exemption for non-citizen in respect of 100% of director fees. So if you are a non-citizen, you're working in Labuan, the director fee 100% is exempt. Okay, that's kind of a big benefit, yes or not? Okay. Exemption for Malaysians is hopeless lah. Okay, don't hope a lot. Exemption of 50% of employment income in managerial capacity for Labuan entity in Labuan or co-located offices which may be located elsewhere in Malaysia to facilitate business meeting, but cannot be for exercising trading activities or on behalf of Labuan entities. So you can get some exemption here, but must be in a managerial capacity. Can? Okay. Last one, you got exemption for Malaysian citizens in respect of 50% of gross housing allowance only. Whatever you pay housing allowance, you can get 50% exemption. Okay, that's about it. And gross Labuan territory allowance received in respect of exercising employment in Labuan. So you give a Labuan territory allowance, that will also be exempted. Those are the exemptions. So you shouldn't take it as salary, but you take it as allowance, you'll get it exempted. Can? Okay, any questions there? Clear? Okay. Before we go to this one, this is tax haven, let me just handle this question here. So in this case, how much is the tax to be paid by the entity? How much? You understand this one? Yes, no. Can? So why did I just simply give you the capital allowance and all that depreciation? Yes, to trap you lah. Clear? The exam question will definitely give you some traps like that. Purposely to make you go do some calculate chargeable income, all that, then commit suicide. The answer is actually quite simple, just take the profit only. Clear? Can, huh? If there's a Labon question, it'll be very close to this one, alright? Can? Any questions? Follow. Can I move on? Well, that's roughly it. That's how much complexity you can get in an exam. After that, just maybe classification between trading and non-trading activity. Okay, that's the most that the examiner can go. Can I move on to this question? All done? Any questions there? Okay, so we go on to the next part, something called tax havens. Yeah, do you know what is a tax haven? Have I talked about tax havens to you before? Well, a tax haven is basically, let me see, what are the best tax havens around? There are a few well-known tax havens. Okay, what are the best tax havens around? We check online and see. The best tax havens are, let me see first. Okay, it's over here. They call it offshore financial center right now. Offshore. That is the international offshore financial centers. Okay, and there's a ranking, you know. Okay, tax havens generally a country with very low effective tax rate. Clear? The tax havens also offer financial secrecy. This is one of the benefits. Must be, you know, everything can be hidden there. One can hide everything there. Okay, high level of secrecy, but also high rate of tax. Okay, but however, while countries with high level of secrecy, but with also a high rate like U.S., Germany, they can feature tax havens. Okay, so there are some tax, and there is something called this base erosion and profit shifting. This is a big issue. Okay, corporate tax planning strategy used by multinational to shift profit around. Got it? They call it BEPS lah. BEPS. This is one of the things that the examiner is looking into quite detail. I repeat, the examiner has mentioned this word specifically in the last meeting. So I suspect she is into Lab 1 and all that. Be ready for it, all right? So these are the top 10 havens. Okay, let's look at the top 10 havens. Malaysia's name is inside there, no? Oh, there it is. These are the top 10, you know. Top 10 quantitative study. Luxembourg, Cayman Island. Number 9 is Singapore lah. Okay, that's why Singapore is one of the top places to go and work also lah, because they are a tax haven. So everybody dumps their money there, so you become a very good accountant there. But any of these countries is a good place to become accountant. Your training is very high. This one is the best lah. You go work in Luxembourg, then you'll become a specialist in hiding things. Okay, so this Cayman Islands is another one. So these are all the places where you should try. These are places where they hide for profits. So you can see they keep changing around. Netherlands, Ireland. Ireland is one of the number one. You can see here, Ireland is the number one for base profit erosion. Singapore is quite strong, you know. Understand or not? That's why Singapore is a ranked item in terms of wealth of finance. All right? Clear? Not clear? Can so they are top 20. Don't worry, I don't think Malaysia is somewhere in here. Let me see where's Malaysia. Malaysia is number what? Can you see Malaysia's name anywhere or not? Labuan also don't have. Nothing. Maldives, Malaysia, no lah. Sorry lah, we all not one of those upper class lah. Our Labuan is like some cacat place lah. Not even rated anywhere. You can all see the countries where. Never mind, you know lah, we cannot make it big in tax havens. We're not a well-known tax haven. But anyway, you need to know about tax haven. Why? Well, you're working in multinational and you're working in transfer pricing. This is one of your skill. You can save money for them a lot. Are you clear? Okay. So, is a place used to offer shelter from other tax if all arrangements were operated on a commercial basis and nothing is artificially created. Remember, everything can be done commercially. Clear? Have I showed you how Island was used by Apple to reduce their tax? I think I showed you this, right? So that's basically part of, that's why you see Island is appearing there, the names. How they manipulate the movement of tax. Okay. So, there should be no withholding tax on distribution or payment of to non-resident, no anti-avoidance provision which may negate any tax advantage, absence of a corporate tax or income or on income or capital. So, there's no tax also. Very little got but might be like 0.2% or 0.5%. Income received from outside the tax haven should be fully exempt from tax. Double tax treaty exists to reduce tax at the source location to nil or nominal amount. So those are all the things that you look for, benefits you look for. There's also non-tax consideration. So there's tax consideration, then there's also non-tax. For example, freedom from exchange control, adequate, efficient, inexpensive communication facility. That means they must have a strong internet. Okay. You should have minimum disclosure, secrecy. That's where the secrecy comes in. And you should have political, economical stability. And there must be quite a lot of, guess what? Accountants. Okay, there must be a lot of accountants staying there, then it's worthwhile. Okay? So that's why these are all the top places for training for accountants. Okay. Areas where tax havens have been used, normally for group financing, for management companies, but if you do group financing in terms of Malaysia, you should know there's a subject to 15% withholding. Got it? If you do management companies, remember there's a services 10% withholding. Got it? Okay. Trading companies, purchasing company or captive insurance company, no, not subject to withholding tax, but there is a risk that transfer pricing regulation could apply. Okay. That's about your tax havens. Okay. Any questions on tax havens? Can? Okay, so we are done with that one. Therefore, I think we are finished with everything. We're left with only two major elements. I'm going to GST now. Okay, next class I'll do reliefs. Can? Okay. Let's look at GST. Where's my GST? Let's go to GST now. Are we all okay? Any questions? Right, when we're looking at GST now, you have to study this or it's examinable until September 2019. Okay, it's examinable until September 2019, so you can't avoid it. But the examiner has not mentioned how deep she will be going into the exam. But I suppose she won't go beyond her technical articles. Okay, I repeat, she won't go beyond her technical articles. I hope so. Okay, right, let's have a look at this part. Okay, I'm starting off with an illustration here. Okay, supplier sells a good for 100 ringgit to the manufacturer who adds 200 ringgit, who sells it to a wholesaler who adds another 100 ringgit value, who sells it to a retailer who adds $50. Wow, there's a lot of value chain here. We call this the value chain analysis. Clear? Now, based on this movement, calculate the input and output tax payable by each party. Can you calculate the input and output tax payable by each party quickly? Make a table, figure it out. let me give you the table first. Put the party here. Well, this guy sells for 100. Next person sells for, son sells for 300. This guy sells for 400. The son sells for 450. This guy not selling for anything. Okay, now hurry up. The son got nothing here, yes or not? Okay, that's all you need to know. Fill up all the numbers. So here, I think it's are you okay? Can? Clear? Not clear? Follow the steps or not? Okay, so everybody pays. At the end of it, total tax collected is supposed to be 27, which is what this guy is paying down here. Okay? But everybody has to pay a little bit of it. Not everybody pays it one shot. Okay? So as long as you're running through the production value chain, you start collecting tax. Okay, so this is what we call okay. Can? Any questions there? Follow? Right, the next part. Fox, remember, buys their supplies from a registered person who sells the goods at $400. Fox sells for 600. Explain the GST position if for Fox, if the sale was in Malaysia, if it was exported, and if Fox is selling exempted supplies. Okay, what happens? You tell me what's the situation. I'll tell you what's the input tax. The input tax is the output tax I need you to worry about. Here, how much is it? RM 36. Here will be how much? Okay, here also nil right now. So here become RM 12 payable. Here you should get RM refunded. Here got. Are you okay in this part? Can? Clear? Do you know what is an exempted supply before I go on? Can you give an example? Healthcare, okay. Can? Can I go on? Okay, so imported goods, you're okay, Ria? Can, huh? There is something called importation. Okay, any questions here? Can? Okay. Next area. So now we look at scope of charge. Okay, GST is charged on taxable supply of goods and services made in the course of furtherance of any business by a taxable person in Malaysia. It's also charged and levied on importation of goods and services into Malaysia, paid by recipient of service. Got it? Okay. Supply of goods and services, exchange for consideration, money or barter, leading to transfer of ownership, transfer of possession of goods without intention to transfer ownership is service. Taxable supply, this is either standard rated 6% or zero rated. Can include disposal of business asset used for non-business purpose, which is called deemed supply. Gift exceeding 500, the gift part, I better give you an example for the gift. So the gift relief is a cumulative test. Are you clear or not? You test it on a cumulative basis. If the cumulative amount of gift exceeds, then the whole thing becomes taxable on that day. The whole thing. The moment you pass 500, whatever the pass out, add in together and it's taxed. Individually 500 only. One person 500. One person. If 2% can, different story.
500 is if let's say the company is submit the GST is done monthly. So the 500 each month or cumulative as well.
Cumulative.
So the whole year
Throughout the whole year, they'll trigger. Okay, the moment you pass 500, you put it in that month. Are you okay in this part?
And the following
No,
month?
no, it's just that amount only.
One time only lah.
One time already. Once you already triggered already, it's already counted as a gift already. And if you give some more to a person, it's still taxable. You exceeded the 500 limit already. The limit is 500. The limit is 500. Once more than 500, they won't consider that you're giving a gift to that person anymore. You're doing normal transfer of goods already. Substance is you're doing normal transfer of goods at zero price. They will still use the valuation as per norm and ask you to pay the GST for it. Are you okay in the logic there? Okay. So the cutoff is 500. Okay. Are we okay in the $500 limit? Can, huh? Okay. Let's talk about the next thing. Okay, so goods are goods which are business as at time of registration, employee benefit given to employees. Taxable person, any legally recognized entity used as a business tool that has either reached a turnover of 500,000 or voluntarily register with GST. So some people want to voluntarily register with GST. Got it? Can, huh? What is a business? Well, it's a serious undertaking, reasonable continuity, regular manner, predominantly making supply for consideration, common to commercial organization. Employment or hobby is not a business, but director fee for someone carrying out profession is subject to GST. Outside scope, well, supply made outside Malaysia, made by non-taxable person or not in the course of business. These three are outside scope. Can, huh? Okay. Let's take a short break there. Take about 15 minutes. Okay, let's look at this one. Can you give me 5 examples of zero rated item? Zero rated item. Can you give me 5 or not? You should know what. You always go beli belah. Milk, okay. Some more? Sugar. Some more? Rice. Electricity. $300 unit. Some more? Seafood. Chicken. Okay, can, Done, Don't worry, I don't think your examiner going to ask you this. This is just for knowledge, building the scenario. Okay, next part. Give 3 items that were given GST relief, no payment needed, within private education institution. Okay. Right, that is GST relief. Does that make sense? Next one is what? Explain deemed supply for services and goods. Okay, what is deemed supply? So now
Actually, we need to unlock the phone.
my phone suddenly listened to me talking, then talk back to me. Tap tap. That day my friend said his friend says something. 3 days later, the phone is giving the recommendation. Because the phone is always listening, you know. You don't talk to the phone, also the phone listening to what your conversation is, and then store, and then send to Google, and then Google search for you. It's like that already now. The phone is always listening. You know or don't know? It's very scary. It's like some evil person sitting here listening to my whole lecture. Next thing you know, lecture me back. Deemed supply. Okay, now what is deemed supply? Okay, are we okay? Right, these are things that you should know about GST. Can? The definition of supply is very important when you get relief for certain things. Are we okay? Have you been finishing all the passive questions in your pack? Better finish all the questions here. Let me just go through. By now you should finish, all questions can be done already. All questions here can be done. This one I think can be done already. This Anak Malaysia. This one, okay lah, this one don't bother this one. I think this one no need to do. This two no need to do. Okay, remember, don't do this two. Page 119 at the back. Go to the back. So I think you can do Anak Malaysia already. AM. You can check and see whether the answer is in the system or not. Go and check the video. There should be a video there. The video is there, then do. Okay, you just try yourself first. You know the technique I told you to use the feature, clean up first the data, draw the box first, figure out everything, then apply to the question and then solve. You remember that technique I got to teach you how to do, right? Yes, no. Remember, practice that technique. You know which technique is that, right? Yeah, what? The one, all the box, make every question into a box first. Box of 4, remember? And then you fill in all the boxes first. Then you look at it, then you solve the problem. Okay? Because if you see it this way, sometimes cannot see. It'll stay in a very messy mode. Okay, then you'll see which box is used and not used, then you'll know which one is to be used. Got it? So I want you to train that technique of breaking the question up. Okay, so this one can be done. This one don't do. Cancel this one. Don't waste not Senang Berhad. Cancel. Don't do. Okay, this one cancel. Vroom must do. Vroom very important question. Check and see. I think got vroom inside there. Okay. FPC must do. Alright, make sure you cover FPC. I think this Nikki and Grandpa also can do. This one also can do. White Knight Senang Berhad. This one cannot do yet. This is the only question you cannot do. Foreign investor. Okay, this one we just put on hold first. Okay, this is incentives. We'll worry about the incentive later. This one you can do, I think so. This is Buku Senang Berhad. This is about market value of shares or option. This one is ESOS. I think you can do this one. This one 60,000, 70,000. This one is withholding tax, can be done already. This one, read cannot do. Probably today if I finish it, you can do it. I reach today means you can do, alright? This one definitely can do. Green golden. Must do. Must do. Then this one also must do. AA, BB, CC. Alright, must do, finish. Then you got this one must do, finish. Very important. Got control sales, can see now. Highly likely to come out this time some more. Alright, okay. Big Senang Berhad and small Senang Berhad. Then you got this one cannot do yet. I will, after I finish, I repeat, once I finish group, you can do this. Clear not? This is group relief, so never mind. Let me finish group, then you'll do that. Okay. This one must do. RPC. Tanah Senang Berhad. Are you okay? Then you got Grand Senang Berhad, you must do. Moody's cannot do yet. Anyway, Moody's shouldn't come out because it came out last sitting. Okay. Then you got Golden Land. Yes. This one must do. Are you okay? And then you got another one here called Excellent Services, cannot do yet. I'll do that later. Okay, that's it. Okay, so only a few questions you cannot do. Does that make sense? I've already told you what you don't do and what no need to do. Can? I think Yummy no need to do lah. Is it Yummy or Waste? Waste. Waste no need. I think Yummy also no need to do, right? B and C no need to do, correct? A can do, yes or not? Can, this one on hold lah, read and all that. Okay, certain questions are on hold, but generally I think you should be able to finish this up. So start doing it now and try to practice your skill of analyzing the question. Focus on breaking the question down. Don't worry about the answer is a byproduct. Remember, the answer is a byproduct. If you worried about the answer too long, you're probably not going to figure out the technique. Your objective is get your technique to break the question smooth. Once you can break the question smoothly, after it depends on knowledge. Your knowledge is okay, you can close. If your knowledge is not okay, nothing can be done. Break the question, no knowledge, still no use. Clear, not clear? So knowledge on one side, break question one side, answer one side. The answer is a byproduct which should naturally fall in place. Can? Okay, so that means you've got quite a number of questions to do. You know each question, have you tried it before? Any of you tried? How long? Normally, if the time is 30 minutes, it will take you 1 hour. So far, have any of you tried it? Have you all registered on the system already? Not? Registered already, you're on the Schoolology system, right? So if you have normally 30-minute question is about 1 hour for you to do in the house. It takes on average because you like to stop, listen, think for a while, look at your note, fine, then read it, then do that one will take you longer. If you just do straight, of course, different story. 30 minutes, 30 minutes. Can you understand this part? Can, Okay, so I suggest you take your time and get it done. You got 7 days lah. Okay, who's full time? No full time. You are full time, correct? Full time, working. So both of you must finish it. Okay, This one pressure. Must pressure them. Full time all must be pressured until like penyet like pisang penyet like that. Okay, right now let's get back to this one. Where did we stop last? Okay, we're looking at your. Where's my GST now? Okay, we're now looking at this part where now page number. Okay, here. So we're done with scope of charge, out of charge, explain. Okay, now we're going to idea called place of supply. All right. Place of supply. A supply of goods must. Okay, remember a supply of goods must be made in Malaysia for GST to be chargeable. Okay. Goods shall be treated as supplied in Malaysia if goods are in Malaysia or removed from a place in Malaysia. Okay. So in Malaysia or removed from a place in Malaysia. Service is treated as supplied in Malaysia if the provider of the service belong to Malaysia. This is very important. GST is to be charged on taxable supply of goods and services where supply is made in Malaysia. Supply not made in Malaysia are considered outside scope. Okay, now tell me which is which. Malaysia to Malaysia, place of supply is Malaysia. Malaysia to Thailand? Malaysia. Okay, let me go one by one again. So here you got from, to, then here you got place, and then you got treatment. Okay. From Malaysia to Malaysia, this one the place is Malaysia, therefore standard rated. Okay. The next one is from Malaysia to Thailand. So place of supply is going to be you are supplying. So this is export, yes or not? Does that make sense? So service, remember, a supply must be made in Malaysia. Goods shall be treated as supply if the goods are in Malaysia or removed from a place in Malaysia. So this is removed from a place in Malaysia. This one didn't come from Malaysia. The place of supply is, this one is Vietnam to Malaysia. So this one place of supply is Vietnam, but then still got importation 6%. Are you okay? So this one is China to Japan. Place of supply is actually China. So this one is outside scope. Okay, done. Any questions there? Clear? Can, Okay, can I move on to the next part? Supplier of service is treated as being in Malaysia if supplier belong in Malaysia. This word belong in Malaysia, be ready. Examiner can test this. When the supplier belong in Malaysia, okay. Business establishment in Malaysia, no other place. That means their business is in Malaysia, full stop. No establishment but reside in Malaysia. Okay, number 2. Number 3, establishment elsewhere, but Malaysia is the one that usually deals with the service, or establishment includes branch or agency which business is carried out. So this is for services. Services, we have 4 conditions. What's the 4 condition? Service from Malaysia. Last one is what? Establishment include branch or agency through which business is okay. Can I move on? Okay. Next one. Reverse charge mechanism for imported services. Customer who gets services must account for GST and not the supplier. Time of supply for reverse charge is the earlier of date of payment made or date when invoice is issued by supplier. Does that make sense? Earlier of. Can I? Okay. Registration for GST. Okay. Liability to register. A person is required to be registered GST if he makes taxable supply where in the 12 months period the taxable turnover exceeds 500,000. Okay. Taxable turnover. Taxable turnover means total value of taxable supplies excluding the amount of GST. That's the meaning of taxable turnover, excluding amount of GST. Okay. Calculation of taxable supply for GST registration. So you need to know what is the taxable supply. Value of taxable supply should be calculated on all taxable supplies, standard and zero rated, made by any person for a period of 12 months. Exclude the following things. Okay. You got disposal of capital assets. You got supplies outside GST scope. Imported services. Remember imported services, importation, right? Okay. Disregarded supplies made to approved toll manufacturer scheme, warehousing scheme, supplies made between these designated areas. This I call special sales. Clear? So remember earlier on I used this word called special sales. Okay, that's taxable supply. Alright? Okay. Value of taxable supply to be included as follows. Okay, these are the classification. But don't worry too much about this. The examiner is not going to ask you too much in detail on this one. Alright? Okay. A company is all taxable supplies made by the company. A company with division, all taxable supply by division and branch. Then a sole proprietor is value of all taxable supply of the business. Partnership is all taxable supplies by the partnership. Single taxable person, value of all taxable supplies by the business entity registered as a single taxable person. And you got JV, all taxable supplies of JV. Can? I doubt your examiner is going to ask you this one. Okay, but this one the examiner may ask. The 12-month period, when do you need to register? Okay, by when you should register. Taxable turnover for a period of 12 months can be determined either on historic basis or future method. Okay, the future method is relevant because of companies requiring to forecast their sales. Remember, you need to submit your estimation of tax and so forth. Therefore, the future method is valid. Can? Okay. So, historic method is based on value of taxable supply if any month plus the value of taxable supply for the 11th month immediately before that month exceeds 500,000. Clear? The other one, future method. For the future method, taxable turnover is based on value of taxable supply in any month plus expected value of taxable supply for the 11 months immediately after. So this keyword, this is expected. This is actual. Can you understand the difference? One is based on actual sales, one is based on expected sales. So have a look at this part. Your June 2015, you have a sales of 402. By April 2006, your forecast is going to be 100,000 moving forward. Okay, so here you're liable to register by when? This is, remember, historic. Going backwards, looking backwards. This is look backwards. Can? Okay, so the way it goes is this. So here up to April, just refine that question. You okay there? So this is about when to register. Are you okay? Can I? This number 500,000 and all that is kind of important because the examiner does test it on a regular basis. All right? Clear? You may need to mention about the future method or the historic method. So based on what basis are you registering the person? Okay? You may also argue why do you want to do voluntary registration? Why? Can? Any questions there? Follow? Can I move on? Okay, now moving on. We're going to look at time of supply. General rule for goods and services. General rule is when completed. Okay. Invoice different date. If earlier you use this date. So if the invoice is a different date, if the invoice is earlier, you use the invoice date. Always follow the invoice date. Okay, not. Generally, when completed. Okay. The idea is when you complete is the point of the GST time of supply, got it? The point where supply has been made when completed. If the invoice is earlier, use that date. Are we okay? Now for goods, when it's made removed or made available. But if payment is received, use that date. See, if they pay you money first, you use that date first. So they always try to collect faster. Remember the rule here, GST faster, GST more happier. Customers are happier if you can collect the money faster. So whichever leads to faster collection, they will normally allow that, except in certain cases. Yeah. So for services performed. Now, there is a 21-day rule. Ever heard of the 21-day rule? That your invoice is within 21 days, then you can use that one later. Okay. Let me just give you an example of that one first. Over here. Senat Sdn Bhd issues a tax invoice to a customer of 1,060 on 5/11/2017. The customer has paid it on 12/10/17/800. Okay, how now? Which one? How much you? What's the date of supply here? So let's say tax invoice date is what? Date is 15/11/2017 for RM okay. How now? Can? Any questions? Right, let's move on to the next one. So are we okay with the first part? Now we go to the next question to understand this one. Okay. Snart Sdn Bhd also makes delivery on 28/12/16 to Flash Sdn Bhd for sales value of 2,000 excluding GST. Flash paid on 2/1/17 and the balance to be paid later. Explain treatment if Snart had issued the invoice on 12th January 2017 and 25th January 2017. Well, I got 2 dates there. So I'm going to break it down this way. Yeah? How invoice 1? Can, huh? Clear on these rules? Can. Any questions? Can I move on? Okay, next one. Lance never had the following sales for 3 different customers on consignment. Okay, consignment got special rules here. Okay. Time of supply is the issue of statement of sales that goods have been sold, or 12 months from delivery, whichever is earlier. Got it? Okay. But if the tax invoice is issued within 21 days from the basic tax point, use this date. Isn't got it? 21 days from that basic tax point. Are you okay in this part? Can, huh? Okay, let's have a look at this part. Huh? So, Lance has the following sales to 3 different customers, consignment. We want to clarify when GST should be accounted. You got delivery dates there, you got statement date, you got invoice date. Okay, how? Okay, fill this up. Okay, done. That's the basic text points for the first one. Delivery date, statement date, invoice date. How? Which is earlier? "12 months from delivery date or." Which one earlier? Not the delivery date, no. You must say 12 months from delivery date. Are you okay or not? So the point here is 21, 12, 16. Are you okay? That's the earlier of. Okay, not the delivery date. That one for normal sales. This is for consignment sales is 12 months from delivery date. This one must plus 12. Compare with this one. Are you okay or not okay? Can? Invoice is 21. Yes, I think the answer is yes. Yes, no? Within 21 days, right? Therefore, account in. Finish. Okay, now can you do the rest? What do you get? Basic text point? Next one, 28, 9, 15, 28, 9, 16. Yes. This is 1 day apart only, yeah? Understand? It's just 1 day apart, huh? Are you okay? Can I move on? Can I? Your basic text point? Because invoice is not in 21 days, what? Follow, ah? Okay. Next, this one. 1, 1, 15, 9, 12, 15. 15, 1, 16. How? Okay, can? Follow? Can? Any questions? Can I move on? Right, the next one we're going to partial payment split GST to follow payment pattern. Okay, that one you already did already. So we got 3 ideas here. 1, 2, 3. Got it? I repeat again. Got 3 ideas in this box. Box number 1 is about the 21 days and when you submit your claims. Okay. Second one is a consignment. Third one is partial payment. Partial payment is the first one we did actually. This one is called partial payment. Okay. This scenario is called partial payment scenario. This is the normal tax invoice assessment. Are you okay? And this is for consignment assessment. Okay. Are you clear on the difference with consignment assessment, normal, and partial payment? Can I? Okay, right. The next one we're going to go into is value of supply. The value. By the way, this is the main 4 areas your examiner likes to test. So if you're okay, these 4 things you're okay. Most likely the exam should be hitting within this 4: supply, value, time. Right or not? So is it a supply? Is it a supply or not a supply? What's the time of supply? Okay, the valuation of supply. Okay, and the type of supply. I don't think examiner is going to go beyond that so far. The other thing that she might test is partial exemption, some of this de minimis rule and capital good adjustments. That's the maximum she will go. Are you okay now? I don't think she's going to go beyond that, alright? Okay, so let's go into this one. Where are we now? Okay, now value of supply. Well, the value of supply is, okay, what happens here is consideration in cash. If somebody pays you in cash, then you use standard rate. You standard rate the cash value, alright? So if I give you a car and then you pay me a cash amount for the car, then standard rate the car value, cash rate. Are you okay? Second one is consideration partly in money and kind. This is where you trade in a car. Does that make sense? So I didn't pay you fully in cash, I paid you partially with a car also, yes or not? So that might be something else. So consideration partly in money and kind. Then you got value for imported goods and supply with no consideration. Okay. So value for imported goods valued by customs and excise duty. Supply with no consideration, use market value of item given. Got it? Okay. And use open market value of in kind. Okay. Example, let's go one by one. Wayne Sdn Bhd purchased a new machine by trading up their old machine with Celine Sdn Bhd. The new machine has a price of 800. The old machine has a market value of 720. Explain how Celine should account for GST. Okay, how now? Understand what I mean? Exchange without cash, right? Does it make sense? Remember, the 720 is already inclusive of GST, you know. Yes or not? 720 is already inclusive of GST. Can? Clear? Not clear? Can I move on? So what do you think about the next question? Okay, Celine also sold another machine for 900 and an old machine worth 500. The price of the new machine So another machine for cash of 900, an old machine of, that means trade in lah, top up. Okay, the price of new machine is 1,003. Exchange with cash is not a problem. Huh? Remember, exchange with cash is not a problem. I'm not doing that one. All right. Can? So are you looking at all the situations that can hit you in the exam? This one hasn't come out yet. It's quite simple actually. It's not that advanced, but you do have to remember the rules. And it's easy to make a mistake, right? You might accidentally use the price of the machine. Once you use the price of the machine, that's it. Remember, the marks are like 3 marks each, 3 marks each. Examiner is not giving like 20 marks for this calculation. It's like 3 marks. Another 3 marks there, 3 marks here. Slowly you end up, you lose a lot of marks. Okay? So you do need to know, this exam question is all piranha. Small, small fish that bite you and kill you slowly. Clear? No one major question will kill you. Alright? Okay. Can I move on? Next one. Okay, what's the next one? Celine had imported a machine at a price of £20,000 when the rate is 5.6 per pound. Okay. The customs department had placed an excise duty of 10% on the market price, and market value is assessed to be 128,000. Okay, how now? Are you okay in this part? Can. So remember, this is about valuation. This is not about importation. Obviously, importation must be charged GST, yes or not? But this is about the valuation of the import. Clear? Can I move on? Okay. We're done with this one. Now we're coming to something called composite and mixed supply. Okay. The idea of a composite supply, okay. What's the idea of a composite supply is basically whether your bill has a single item or breakdown item. Okay, repeat again. Composite supply, whether your bill has a single item or a breakdown item. You understand what I mean? Breakdown. Breakdown means one by one. Single means just one item only billed to you. Okay, like when you buy a car, I don't think they put tires separately, aircon separately, seat separately, yes or not? They put as a single bill, car, finish. Okay, are you clear on that logic? But when you go do car service, they can probably like break it down, labor so much, so much, so they can break it down. Okay. The idea here is to see whether you have a composite supply or not. And hence it will influence your billing and also your GST structure in your system. Are you clear or not? Are we clear on the logic there? Okay, so the words that we look at is incidental, integral and tie-in component. Alright? These are the three ideas you look at. Incidental means there's something dominant and there's something on the side. Like for example, if you buy nuggets from McDonald's and they will give you a sauce. The sauce is, there's a dominant and there's a incidental element, yes or not? Clear? Integral means all items are equally important. Integral, all items equally important. Tie-in means some item is given free. Like when you buy a handphone, they give you the earphones free and the charger free. Clear? Not clear. They don't need to bill you for those things. Clear on this logic right now? Okay. So indicator of a composite supply is package as one price. Are you okay in this part? Is package as one price. You cannot buy the item separately. Clear? Like that day I was asking, I think Intech, I was asking them for A-levels course. They said, you have to study there and stay there. You must study there and stay there. So they said, the price is 38,000. I said, can you break out the stay part? I said, I'm staying nearby. I don't want to send somebody so nearby. Like, oh, discount 4,000. I was like, huh? Only 4,000 for accommodation. Is that right? 4,000 only, no, accommodation. The rest all is tuition fees. So that's an example of can break out or cannot break out. Clear? Okay. So package is one price, cannot buy separately. And customer expect it to get it in a package. Okay. Are you clear or not clear? So if you buy a holiday package, normally you expect the plane ticket and the hotel together in a package, what? You don't expect it to be separately sold. Are we okay in this part now? Can? So do you understand what is the meaning of a composite supply? Yes, no. So supply physically packaged together an item if items removed will affect the main supply. That's the meaning of composite. Okay. Now, then there is something called mixed supply. Mixed supply means everything can be broken down. Okay. Are you clear on the difference between mixed supply and composite supply now? Mixed supply means could be separately supplied, could include taxable element exempt item. Like for example, you go in supermarket and buy, you have to list everything out. What? Taxable, exempt, okay? Could be inclusive of goods and services. Like when you go and do a car service, goods and services. Or you go to hospital, sometimes medicine and the specialist fee and all that. You can break it out. Okay. Are you okay in the idea of mixed supply now? Okay, in the two words now. So understand what's the meaning of composite supply? What's the meaning of mixed supply? Yes, no. Okay. Separate pricing listed for each item. Components are not integral. Remember, the items are not integral. Components are not interdependent. Then you probably have a mixed supply scenario. Okay. This will limit the input tax that can be claimed. Restrictive. Okay. Now have a look at this one and you tell me which is it now. Is it a composite or is it a mixed? First one, housing supplier sells a house and gives a fridge and a washing machine free with the house. Composite or mix? That's a dangerous problem. You understand the issue, right? Should the housing supplier bill one shot or should it split? You do know house is free supply, exempt supply, is it? That one gone case already lah. Okay ah. If you know some people, I think some houses got lift right nowadays. Some houses, like, I don't know, like lazy people put a lift in the house. There's one I know somewhere in Kemuning here. The house is 3-story with lift and someone got swimming pool in the second floor. You will die for maintenance. You want to maintain your house, also got problem. Lift must maintain, swimming pool in the middle of the house must maintain. You accidentally fall into the swimming pool. Okay, are you okay in this part? If it's a lift, it's a composite item, alright? Cannot be removed, cannot be sold separately. Clear? Next one. What do you think? Okay, you do the next one. There are 1, 2, 3, 4, 5, 6 items here. You decide composite or mix. You understand what composite or mix, right? Yes, no? Just decide. Are you done? So a retailer sells hamper with $500 which include wheat, flour, drink, chocolate, biscuit, cakes. What is it? Composite ah? Wow, like this gone case of the piranha bite you until you die. You didn't see that, did you? Well, you could have just used the second pointer, which is it was available separately. Each items are available separately and not interdependent with each other. You could buy them standalone. There's nothing which is dominant there. You could have used all the other variables to answer, no problem. The knowledge is quite wide for you to answer. Are you okay or not? So the words you're supposed to use is from this set of words here, remember? There. You, as long as you can use those words there, you're going to get marks. Okay? Can. Okay lah, we go to the next one. Car repair. Apa macam? Composite or mix? Mix. Next person. Mix. 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 Composite. What? All the guys going for composite lah. Okay, the car service, right not? Yes, no? Car service, right? Okay, so I think the words car repair sells a battery and also provide car service together with a deal. It's just a package, but can you buy the battery alone? Can you buy the service alone? Cukup lah. That's all you need to say. Can be bought standalone. Okay, so I think you're getting the hang of using the knowledge rather than trying to use your memory. Use your knowledge to test it. Okay, now. Can? Okay. Suppliers selling rice also provide delivery service to the factory. Composite or mix? Composite or mix? Well, you should use your common sense. Whenever you go buy things from Harvey Norman, they also give you no, Harvey Norman different they charge you lah. But I think they put it in package, right, when they bill it. Did they separate it out, services? Some do. But normal companies, if they provide delivery, they don't separately put it out. If they sell it as a package. Does that make sense? You order water, right, for your office. Do they charge you for delivery? No, it's single composite billing, yes or not? Incidental. It's incidental, yes or not? The transport is incidental. So here, are you okay in this idea? Can, huh? Are you getting clear with composite and mix? Yes, no? So far, examiner not yet test all of this. The whole syllabus, very little she is tested. So in terms of examining scope, this all simple areas can be tested quite easily. Okay, now the directors are not clear about how to do the billing. Should it be a single bill or a line by line item? Explain. And then you have to use all the theory lah. Okay, can I move on? Okay, the next one you got is company sells car and promises delivery. I think it's the same lah. This is also the same for can both also composite lah. Okay, remember what are you doing? You're just looking at the invoicing, whether to do line by line or single. That's it. Okay, that's all the judgment. This is all about composite and mixed. Can? Okay, next one. Airline sells plane ticket together with food service abroad. Sound very complicated. These are very complicated. You know why very complicated? Depend which airline. It must composite, correct. If Air Asia, it will be. Yep, that's correct. So, airline, I would actually have to put this one down. Must composite, since a side element and the next one you go for Air Asia, you have to say mixed, since food can be purchased separately. And what else you can say? There are other points that will break it out. Keyword is separately supplied lah. Okay, are we okay in this part? So you are right, you do need to look at the condition of the business. Are you clear now? You cannot use a standardized approach. Like if you go and buy services sometimes, like they have this package services, they might sell it to you as a the filter, the oil change, everything in one package. That one might be a composite, You can't separate it out and all that. So it's a bit tricky. You have to look at the business all the time. Alright? Next, tourism companies sell tour package with flight, hotel, transport. Explain how to treat the supply. So how? Apa macam? This is composite. Which tourism company you buying from? You're buying from Reliance means I don't think you can buy separately, right? You got buy tour package before? Not yet You got buy not? They sell you one package what? Everything is packaged in. Can. Does it make sense here? Clear? Can I move on? Can. Okay, the next one we're looking at there is a difference between disbursement and reimbursement. You know the difference between these two words? What's a reimbursement? Different type of expenses, actually not. You reimburse somebody, like your staff claim from you, yes or not? When your staff claim from you, it's called a reimbursement. Clear? Disbursement, what is that? You pay on behalf, all right? Okay. So expense, notice that, incurred as agent. You pay on behalf. Okay. Whereas reimbursement, incurred as principal. Final recipient, okay, customer, tax invoice under customer's name. Okay. Here, tax invoice under registered name, the principal. Okay, are you clear on the difference between these two? Follow, don't follow. Okay. Payment responsibility, customer pays it. Here, the principal pays it. That's all. Okay, are we okay on disbursement and reimbursement? All right? Okay. Now, back to this part. GST audit. There are a few types of audits. You just need to be aware of the different types of audits. DES audit is just basically looking at the information declared in returns. Then you got refund audit. See, refund is true and correct or not. Okay. Then you got transaction audit, occurrence and reported correctly or not, all the transactions. So remember the mixed and composite supplier will hit here. Okay, whether your transaction occurrence and reported correctly or not. Advisory audit will just come in and advise you and educate you on the GST obligations and all that. Then you have compliance audit, comprehensive audit of all transactions, see whether everything comply or not. Okay, again here mixed and composite will come in. Okay, Then you got cancellation audit, comprehensive audit before GST is cancelled. So that means you're terminating your GST. You no longer want to be under GST, all right? Then you have special audit. The Director General of Customs decides on the scope of the audit. And you got large taxpayer unit audit. This is for big companies like Nestle or you got Tenaga National, all that. This ensure compliance for large payers. Got it? Can, huh? Okay. Now, this audit, special audits, remember, basis on deciding who to audit is basically based on risk assessment. Sometimes they get tips. Sometimes they look at the number of mistakes you make, okay, and who's the agent you're using. Your tax agent. Your tax agent cacat, they'll check you. Because they know this tax agent always make mistake. Can, huh? It happens, don't worry. The tax agent is the one that bills, you know that, right? Your tax agent is cacat, they black mark your tax agent, they don't black mark you. Then whoever that name appear, they go and check. Are you okay in this part? It's called cacatness. So make sure your tax agent not cacat lah. Okay, now, how you know, this one you must know the reputation lah. Yeah, right. This is where reputation is important. Next one, penalties. Okay. Now, penalties, I don't think your examiner is going to ask you anything here. Just be aware only. Okay. Don't get too excited and try to memorize anything here. I don't want you to memorize anything here. Just be aware that there are few types of penalties. If I was to group up the penalties, I'll say there are penalties where you go to jail and some you don't go to jail. Okay. Which one you go to jail? Can you color them? Take color pencil and color first. Just color the one with jail, enough. By the way, you don't need to know how long you go to jail. Just say go to jail. Just remember the monopoly symbol. So I can group to two types of offences here. What's the two types of offences? Penalty only. And are you okay in this part? So which are penalty only and additional tax? Can you identify already? Late registration. Anything else? Which one? Fail to register or submit return incomplete. Yes or not? Are we okay? Fail to register. Late registration, yes or not? All the others got penalty and jail time, yes or not? So, what do you have? Incorrect return, some more, what else? Incorrect return, you can go to jail. Some more, evasion, yes or not? Evasion, some more. Fail to submit. Some more, you got obstruct officer. Some more, you got avoid import tax. and fail to pay tax due. Okay, done. Okay, that's all you need to know lah. Finish. Are we okay with 2 types of offences? Very simple, everything put penalty in jail except for fail to register and late registration. That one just penalty only. Can? Any questions there? Follow, don't follow? Okay, let's move on. A single taxable person, 2 or more business may be directed to DG to register under one registration number when they are artificially separated for tax avoidance. Does that make sense? Okay, may be asked to join to single one. Now we come to a concept called partial exemption. Residual input tax is an input tax on inputs not directly attributed, making either taxable or exempt supplies. Not directly attributable, that means shared cost lah. We call this general shared cost. Alright? Clear? Mixed supply, you see, only relevant for mixed supplier. From now onwards, we're going to mix suppliers and a specific kind of mixed supplier. Repeat, be careful, the word mixed supplier doesn't mean their invoices are broken up only. It also means there's a specific kind of mixed supplier. That's a supplier that has what? You got 2 types of supply, taxable and non-taxable. Okay, this part onwards will relate to Are you okay this part? It's about taxable and non-taxable supplies. Got it? Clear, not clear? Okay. Residual input tax is input tax on inputs not directly attributed to making either taxable or exempt supplies. Mixed suppliers have to apportion residual tax, rental, telephone, utilities. They have to apportion it. That means all this general cost, they have to apportion it between the two. Alright? That's why you need to break it down in your invoicing. Residual input tax claimable is based on the following prorating. So there is a prorate there. Okay. Input tax is the taxable supplier divided by taxable supplies plus exempt supplies times your residual input tax. Prorate lah. Okay. Mixed supplier can claim full residual input tax if the supply fulfill de minimis rule. So there is a rule that allows you to claim everything lah. Okay. Okay, look at this one. Company has a taxable supply of 250,000. Exempt supply is 150,000. Residual input tax is 20,000. Calculate input tax that can be claimed for the residual elements. This one's going to be how much? 250 divided by 400,000 times 20,000. Can? Giving you? $12,000. Can? Direct input tax is always either claimable or not claimable. It means if you use a raw material to make something that you're going to charge tax on, repeat that, if you use a raw material and you're going to claim output tax on it, charge output tax on it, then you can always claim the input tax. But if you use the raw material and you're not going to tax on it, then that one you can't claim already. Are we okay this part? Can I move on? Right, de minimis rule. Full residual residual tax claimable if total value of exempt supplies, excluding incidental exempt financial supply, does not exceed average of 5,000 per month and an amount equal to 5% of total of all taxable exempt supplies made in the period. So there's two criteria here. Clear? Example, Big Sdn Bhd makes a monthly taxable supply of 50,000, okay, and has 4,500 exempt supplies. Small Sdn Bhd has a taxable supply of 90,000 and has 4,500 worth of exempt supplies. Discuss tax implication. We're left only with the incentive chapter, right? Any other chapter pending? And I said the last chapter, read lah, because you know why not? That one will be covered. I already covered it actually, most of it. There's a little bit here I will touch up. Can? That last chapter. Most of the other points are covered, repeating points. Anything not repeating, I'll cover again. Alright? Okay, are we okay at this part? De minimis rule? This is something, it's possible for example because of the simple rule, 5% and 5,000. Got it? You think I memorized that? By the way, the examiner won't tell you anything. The examiner just say like, this is a mixed supplier, they have a residual input tax. That's all she will tell you. She doesn't need to tell you about the rules and all that. You should know when the rule is applicable, not applicable. So whether to use this rule or this rule, the first one. Are you clear now? This is prorating rule. Remember, this is called prorating rule. This is like claim everything if it meet 5% and 5,000. Got it? Okay. So remember, so far it's either prorate or 100% if. Are you clear now? That's all you learned so far. Can I move on? Remember I told you have to do a year-end one, right? Year-end one. Okay, let's do a year-end one. So, recovery rate of residual input tax for a taxable period. Okay, a company has a value of taxable supply, excluding GST of 440,000. Okay, exempt supply of 80,000. Values of excluded supply 140,000 and residual input tax incurred is 20,000. Calculate the recovery rate and the amount claimed as input tax. This is only again relevant for what? Mixed supplier, yes or not? Clear? So recovery rate is going to be something like this. Okay, done. Okay, now have a look at the next question. This is the annual one. Okay. So this is recovery rate residual input tax for a taxable period, for one period. Okay, now. Got it? Then annually you have to do one also. Okay. Recovery input tax in every taxable period is only provisional. Make a note, it's only provisional, not yet confirmed. Got it? It's provided only lah. Okay. Mixed supplier must make an annual adjustment for under over deductions. It only, remember, it only affects a mixed supplier. All right. If you're not a mixed supplier, you have nothing to do all of this. You just claim everything. All right. Okay. So a company has an initial claim, initial residual input tax of 264,912. This is what they claim so far, initial, all right? Based on monthly adjustment. At year end, the total value of taxable supply is 6040, exempt supply is 1460, value of excluded supply is 260, okay? Total residual input tax is so much. Now, can you calculate the annual adjustment? How much? I'm going to take that and put it there first. Taxable supply is how much? Exempt supply is this one is 260. This one is 333 SNR. No, I better make it really big, this one. Which one? Same formula. Plus. Can see, I cannot see the formula. This one must minus a 260. Okay? Divided by this one plus this one minus 260. Can? Follow, don't follow? Any questions there? Any problems there? Can I move on? Any questions there? All okay? Same formula, remember, same formula system. You can get this formula system, you should get the same formula now. Only difference is now you just got to compare it with something. Are we okay? Right, let's move out from this one and we're coming to the last big item. Okay, last big items are this one. We're going to look at something called capital goods adjustment. This is done when a taxable person makes mixed supply and has input tax to claim for capital goods. That means your machine you're going to use for both. Remember, if your machine is only used for one, no need to bother. Huh? Okay. Capital goods are those that are capitalized under GAAP. Excluded from capital goods adjustment is lease goods, intangible assets, complete network systems or computer and software. These are all excluded. All right. Now, treatment of capital asset. Capital goods supply is standard rated. Taxable supply, you claim fully. Exempt supply, no claim. Mixed supply, you have to apportion. Are you okay in this part? Okay. Capital asset include any asset capitalized under GAAP. Capital goods not solely for selling, that means you didn't buy it for selling. And capital goods valued at 100,000 or more, that means they have a materiality threshold. Above this, only you trigger this one, all right? Okay. Non-applicability of capital goods adjustment. Registered person makes wholly taxable supply. Mixed supplier uses it only for taxable. Notice that if they bought the machine only for taxable supply, you don't need to apply. This one doesn't apply. Mixed supplier uses it only for exempt supply, doesn't apply also. Acquired for sale, doesn't apply. Acquired for non-business use, home use, personal use, ignore. Input tax has been blocked like passenger vehicle, ignore. Value of asset is less than 100,000, inclusive tax, ignore. So there is a threshold. When you pass this only, you will trigger the capital goods adjustment. All right. Capital goods adjustment is still something that will be going on, which means the examiner might want to test it because it's the only residual GST that's still running. You understand that even though GST has been cancelled, this one is still operating because it operates for at least 5 years ahead. Does that make sense? Okay. So, tax year. Registered persons remain registered for 12 months usually. First year starts when a person gets registered and must not be less than 6 months or more than 18 months. Subsequent year starts at the last day of the first year of the 12 months. Okay. And final tax year is when a person ceases to be a registered person, can be less than 12 months. This is the timing for tax year. Okay. So why you need the tax year? The tax year is very important because capital goods adjustment requires the years. Are we okay or not? Requires years. Okay. So adjustment period, land and building is 10 intervals. Okay. Other capital asset is 5 intervals. First interval will start from date of acquisition, importation or acquired or supplied, date of use for constructed or manufactured asset, and date for registration where owner is not registered. These are the 3 points of starting. Okay. Subsequent interval follow the first interval. Final interval, 10th interval for land and building, and 5th interval for other assets. Now, the adjustment itself will depend on your usage. Okay, have a look at this one. JRT, remember, has a year-end 31st December, is a mixed supplier, acquired a machine for 1 million from a registered vendor who charged 60,000 GST. The annual percentage is as follows. Calculate GST charge. Okay, the first year, they estimated at 61.5%. Clear? Okay. Second year, third year, fourth year, they will use the machine and they will track how much they use the machine for. Are we okay now? That means the machine usage must be tracked. Okay. Now, let's calculate the capital goods. This is the last thing for today. Can? So in the fifth year only you make the adjustment. You don't make the adjustment every year, you know. If you make the adjustment every year, it gets too messy. Clear now? Remember, it becomes too messy. So they said, wait, do for 5 years, then you consolidate and make an adjustment. Got it? For building, it's 10 years. Wait for 10 years. Are we okay this one? Any questions there? Right. That should, I repeat, that should cover majority of GST. We're almost at the end already. I will finish up next class. Okay. Next class we should be able to complete something called transfer of business as a going concern. A bit on registration here, a bit on transfer of again transfer of business as a going concern, group registration. Got it? Okay. And branch division, imported goods, exported services, a little bit on the invoices. Tax invoices, I'm just going to run through it very fast. You don't need to go through all of this too much. Okay. So there's a little bit more here to finish up, and then you got a few questions. I want you to go back and try this question. Try these questions out. Are you okay now? Okay. That should end that part, and which means we are coming to the last part, which is your, I have a little bit more called REIT. I got a REIT, unit trust and REIT, and then I'll start with your reliefs already. Okay? We'll do group relief first because that's the one most likely going to come out. This time overdue. Group relief and export relief. These are two hot ones this time. Group and export is more hot this time. Then you have the others coming in line. Can R&D came out last sitting, so I doubt it's going to come out this sitting. So group relief, export relief, very likely. Can? Then you got your Pioneer, your ITA, your RA, those are the things. Remember, the number of reliefs in exam now is very low. You don't have that many to be examined. You know that, right? You lost a lot of reliefs already. You're only left with a few reliefs. Not like before. Before you had VCC, all that venture capital, all that thrown out already. You got the approved food production, medical, all thrown out. So your scope is much lesser, and within the smaller scope, I think this is the one most likely to come out. Can? Okay. Any questions? Okay. So that's why you can finish a bit faster nowadays. If I do all that, other reliefs all commit suicide.